then yeah, right. Okay, please continue.
Okay,
Sorry
then
for
as I
this.
explained, I then based on the curriculum only, I have basically prepared this base document. So there are a couple of slides that I can present it to you all. I mean, based on that, you all can get an idea. Sometime you all have already, you all have some inputs. So then my main idea is basically discuss this one, basically not to do the presentation per se, just to have an interactive session. So then only we can. So I'm not the person who is going to present these things to the senior citizen. So then this based on this document, you all can get an idea. You all have to develop the content, and those are the contents to be presented to the senior citizens later on. Okay, let me to share the presentation slides to you all. Is it visible to you all? Hello, can you hear?
Yeah, 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 we can see
Yeah.
that.
Okay, so this is what I have prepared. I mean, this is the initial draft presentation slides for discussion, right? So as Professor One explained, this has to be further developed before we present it to the senior citizens. I mean, for that only we need real input from you all, right? So then, so I'll quickly glance through this one. So then later on we'll have a interactive session, okay? Then key financial concept for senior citizens. So there are 7 areas I have recognized. The first one is budgeting and expenses management. So I have done a small illustration also. I'll come to that point later on, right? Then inflation and cost of living, right? Then third topic is basically emergency funds and liquidity. Then fourth one, investment and wealth preservation. The fifth one, healthcare and insurance planning. The sixth one, estate and inheritance planning. And the seventh one, debt management. So these are the key points. I mean, some of these points may not be applicable to all of the citizens. So then the professor explained me, I mean, there are different categories. We have to identify the categories and basically we have to do kind of interactive session, one-to-one session for these senior citizens. So then only we can give some kind of, uh, proper input to these senior citizens to, I mean, make their life easier, right? So then we'll move on to the topic one by one, budget and expenses management, right? Budgeting and expenses management. This is the key area basically we have to discuss. I mean, all these people now they have these issues. I mean, how to manage their fixed income sources when it comes to, uh, very high expenditure. So managing fixed income sources is the first one. The second one is understanding the tax implications and how to mitigate the burden of taxation. So that is the key area to be discussed with these people. For an example, as you all know, starting from 1st of April, the government has taken a new initiative to deduct 10% withholding tax on their the interest income. I think all of you all uh, know about this the change starting from this yesterday. So they are deducting 10% on their interest income. So all these seniors, I mean majority of the senior citizens, they depend on their investment income, or rather they have deposits and they are earning interest income. And so that is the key source as far as the seniors are concerned, right? So then if they are, then previously that was 5%, and then now new government has increased it to 10% starting from 1st of April. But there are certain positives and negatives also to be discussed. The previously that 5%, it's very hard for them to claim it. But based on the new rule they have implemented or rather enacted, so this 10%, the senior citizen can apply, uh, uh, can give a direction to the respective bank not to deduct the 10% withholding tax provided they have lesser than 1.8 million. I'm not too sure whether you are aware of this 1.8 million threshold. The 1.8 million is the revised threshold for taxability. So then up to 1.8 million, there won't be any tax implications. So if you are earning more than 1.8 million only, your income will be taxable. So then the senior citizen, not only senior citizens, everyone, if you have, then there is the new rule, even people who are having, who reached 18 years need to get the tax registration. The first one is that. The even senior citizens also has to do that, right? The majority of the senior citizens has not complied with these the rules. If you don't have the TIN certificate, they are not in a position to apply for this direction. So it's mean then sometime you may have sometime 3-4 million deposits. So then obviously the interest income what you are earning is very much lesser than 1.8 million, right? Then 4 million for an example, 4 million, say 5 million for an example, 5 million, then current, assume the current interest rate is 10%. So then the current interest rate is far below 10%. But as far as seniors are concerned, now new government is introduced additional 3%, uh, 3% uh, the addition. So that with that probably that will go up to 10%. Then say 10%. So then 5 million, 10% mean 500,000 per annum. So the total interest income what you are getting is 500,000. That is very much lesser than the 1.8 million threshold. So then if bank is not going to get any responsibility. So if you are not in a position to give the direction to the bank, so bank straight away will deduct 10%. And what you are getting is 500,000, then 10% will be deducted. So then 50,000, then only 450,000 you are getting. So that is why they have given this direction mechanism for senior citizens and even other people to apply for. Right. So then, so I have given the relevant references also, circular numbers SCC 2025E3 issued by DIR. So 28th March only they have issued this direction, the circular. Based on that, you can apply for the direction. You can give this direction to the respective bank, and you can ask bank not to deduct the withholding tax. Right? So that is one of the key areas. So I'll basically explain how that should be done also later on. Then tracking uh, expenses to ensure money lasts throughout the retirement. So that is the other key area to be taken into consideration. The thing is, I mean, you have to live with what you have, right? So if you don't have the money in hand, so sometime, so as Professor explained before, uh, so before this discussion, he explained what exactly we're supposed to discuss with the senior citizen. Then he said there are different categories. Some of them are basically uh, received a fund in the sense probably they are, the retirement fund. So then that fund only they have to manage throughout their retirement. So that has to be properly managed. Otherwise, you won't be able to survive later on. So that also I have a small illustration. So based on that illustration, you all may be able to understand what exactly we're supposed to do. Sorry. Then avoid unnecessary spendings and impulse purchases. So that is also one of the key areas. That if you have money in hand upfront, you may tempt to spend it, right? So later on, then there will be certain other repercussions. So then those are the key concerns the senior citizens may come across. So not only senior citizens, even other people also may come across. Other people, so of course, they have some avenues, so they can earn money. So senior citizens, they won't be able to earn money later on. So then they have to live with what they have, right? So then that is okay. Before I move into the inflation and cost of living, let me to just run through this illustration. So let's assume we have a senior citizen, Mr. Pereira, who is 65 years old with limited income from monthly pension and saving. Mr. Pereira lives in his own house and has basic medical expenses, living needs. The goal here is to prioritize essential needs and manage expenses effectively with a focus on healthcare, daily living costs, and savings for emergency. So then, I mean, we have to give some idea to the senior citizen to make a budget upfront. So then what exactly you have, I mean, what exactly your income and what are the expenses to be met. So within this particular 1 month period, right? So then based on that, they can basically focus on what are the priorities to be met, right? Then in this example, the monthly pension is 40,000. So this is, I have taken the pensioner. So he is getting 40,000 rupees as a pension, right? In addition to that, he is earning income from savings, income from savings or investment, rupees 10,000. So then he has a small deposit. From that, he is earning 10,000 interest income. So altogether, 50,000 income. So this 50,000 income only, I mean, then they have to plan it properly. Otherwise, obviously, he won't be able to meet his expenses. So these are the expenses. So then the key priorities to be identified. So then I have divided into two categories: fixed income and the variables. The fixed income is 32,000. I have taken out of this 50,000. So basically, utilities 3,000, groceries and groceries, food and household item 18,000, healthcare 5,000. So that, and the transportation 3,000, basic insurance 3,000, and total 32,000. Right? There are less predictable but still necessary for maintaining quality of life. Variable expenses also I have taken: personal care and social and leisure, and savings for emergency fund. So let me to explain these things. I mean, these are very important things when it comes to the senior citizens, especially basic insurance. I mean, sometimes they may not consider the insurance, right? The insurance is a key part, but healthcare is one of the other key element. So each and every month, so they have their the medical expenses. They have to go and visit the doctor, and the medical expenses is very high in today's context, right? So then I have allocated 5,000. So, but sometime you may have to hospitalize. So in that case, how these expenses has to be taken care of, right? So that's what I have taken: basic insurance. So I have basically spoken to a couple of insurance companies also, but they have the senior citizens insurance schemes, right? So then very basic scheme. So I'll explain later on. So they have us. So I'm not going to promote the insurance companies, but I have taken this from Sri Lanka insurance company. So their insurance scheme. So they have five categories. The smallest one is 150,000 per annum. So then, in order to get 150,000 cover, you have to spend only somewhere around 37,000. But 37,000 per annum again, right? Just 3,000 from your monthly income is sufficient for you to meet this expense. But that is very important. But in in some case, you have to hospitalize. I mean, the major part of the expenses they will take care of. I mean, that is very comfort as far as seniors are concerned. So then this insurance we can't, ignore, especially when it comes to senior citizens. So that is what I have taken 3,000 for basic insurance as well. But transportation 3,000. So those are the basic other expenditure. But 18,000 food and other household items I have allocated 10,000. So if you okay, then if you go to the variable the section, but social and leisure also have taken just 2,000, and savings for emergency fund 4,000. So this savings for emergency fund, so that is also very important, right? So why we are allocating this 4,000 for emergency funds, right? So I mean, part of the expenses has to be so then, okay, let me to go through the other one. Uh, So that especially this medical, in addition to the insurance only, we have allocated this emergency fund requirement. So that is also important for you all to take care of your health. So when it comes to the citizens, the main concern area is basically their health. So that is why I have taken 4,000. And in addition to that, if you go to the overall one, 32,000 fixed expenses and variable 8,000, altogether 40. But your total income per month is 50,000, but you have set aside for investment additional 10,000. So that is basically grow your fund. But if you spend everything, so that will be an issue later on. So that is what I have set aside 10,000. So that 10,000 basically you can invest wisely to generate your the funds to utilize, emergencies situations, right? So then I have basically given all these things. Just to glance through, healthcare priorities, emergency fund savings, managing socials and leisure activities. But those things basically the seniors can decide based on their requirements. Sometimes, so in a particular month, your key priority will be the medical. But some months, basically, you can allocate funds for leisure activities as well. So that is what if you go through this one, so probably you will be able to understand what exactly you have to prioritize within the income levels, right? Okay. Then emergency funds and liquidity. So then emergency funds, I have then in that illustration also, I basically have explained you the 4,000 requirement and 10,000 requirement. The 4,000 basically, so we have to set aside 10,000 to grow your fund. So you always have to have uh, 6 to 12 month expenses in liquid assets, right? So then, to meet your emergency requirement. So basically, health again. So I have given priority to the health because of the senior citizens, right? Then, so you have to grow the funds. So then, when you are investing these funds, you have to basically think about what you are going, where you are going to invest also. Then if there is any requirement, you have to take the money quickly. So if you are investing in long term fixed deposits or whatever, you will not be able to get the money back. So then you have to invest properly. Savings account, you can keep part of the amount in the savings account. And even fixed deposits also, you can allocate it. You have to do it properly, divided it appropriately based on the assumed fund requirement to minimize the penal interest. So then why we are saying penal interest, if you invest in loan term fixed deposits, and if you are going to take the funds uh, before maturity, you won't be able to get the total interest income. So then, you have to allocate it properly based on your requirement. So then, 6 to 12 months, the fund has to be uh, set aside. Then you can use that additional 10,000 to do that. And that also you have to invest properly uh, to get the money back as and when it is required. Right? So then investment and wealth preservation. So that is also very key area. So when you are investing, so sometimes there may be, as Professor Ruan explained, there are a lot of scams going on. So then the people are tend to invest in the high risk investment. So that has to be, avoided. The For an example, so there are a lot of pyramids, and even so there are a lot of I mean uh, campaign going on to invest in agricultural sector. So those are not secured investments, right? So they are giving higher returns, but you if you are planning to get this higher return, sometimes you may lose your the capital. So then, so you should not basically invest in those high risk, what you call investment. So as a senior citizen, you can mainly focus on fixed deposits in licensed commercial banks and the non-banking sector. Also, there are reputed companies. So you all can basically check the status. You can check so those are the information we have to give it to them. How to evaluate these companies when you are making the investments. fixed deposits, of course, in a finance, I mean, the licensed commercial bank will not be an issue. But when you are investing in a non-banking sector, but those things has to be properly evaluated before the investment, right? So in order to do that, basically, you can go to the CBSL site and you can download what are the registered the financial institutions in the central bank website. But if there are any issues in that particular financial institutions, normally they will update the system. So you can basically check what exactly the status of these companies before making the investment. But in addition to that, as finance guys, you all know, I mean, you all can check the financial status, I mean, annual reports and all these things. And in addition to that, I mean, uh, the rating companies, they have given the rating. So those things also basically we can check. The thing is, senior citizens may not be knowing these things, but our duty is basically keep them informed. This is what you have to do before the investment. And we should not allow them to invest in, I mean, high return, but high risk investments. That is the point we have to communicate to the senior citizens. Avoiding high risk investment, right? Then even dividends also. Then if you are talking about the stock market, so then even dividend paying stocks also basically okay. There are very stable companies where you can invest your money, I mean, to get the dividend. But speculated stocks basically should not be. I mean, it is not advisable to do that. The thing is, speculated investment is basically kind of investment. I mean, fluctuations are very high based on the market conditions. Even government changes also, lead to change the market prices, but that not reflect exactly the growth of the companies. But if you are investing in these companies, I mean, those are kind of short-term investment, but it carry very high risk. I mean, better not to do that as far as seniors are concerned. Ilanta, then the next one is basically diversification. ඒක ඇවිල්ලා very important one. So then we should inform them. ඔක්කොම සල්ලි ටික we should not invest in a particular company or one place. Do not put all your eggs in one basket. I mean, those are the very basic theories when it comes to investments, right? So then, if something goes wrong, so you will not be able to get anything, right? There's certain things happened in previously the finance and ETI. Right? Those are the example. ETI, you all maybe know in ETI collapse and the finance collapse and the people won't be able to get the money back. Still, they are struggling with the central bank to get a part of the money what they have invested. Right? This is very unfortunate situation as far as seniors are. There are a lot of seniors also. They have invest their, the lump sum money what they have received in these two companies. So there are a lot of people they invested and they are not in a position to get the money back now. So that is the key concern. So those two companies are also basically central bank registered companies. The issue is, unfortunately, they have not checked the CBSL site before they invest. So then, if there are any concerns as far as these financial institutions are concerned, CBSL put caveats there in the website. So if you know how to check this one, if you can go to the website, you can check the company, then you will realize, okay, these companies, there are certain disclaimers. Better not to invest these companies. But then central bank can't go one by one and say, okay, don't deposit in this company and don't deposit in that company. That cannot be done. So what they do is they basically put all these caveats and disclaimers there in the website itself. But what we have to do is we should communicate the senior citizens. I mean, we have to keep them understand. Oh, this is what you're supposed to do when it comes to investment. But this is relevant to the one particular category only. I don't know to what extent they can do investment in this particular, environment. But still, this is important to part of the senior citizens. What we are approaching, right? Okay. The next one. Healthcare and insurance planning that we have already discussed. But thing is, what I need to, highlight is understanding the medical insurance, long-term care insurance, and life insurance. I mean, more than the life insurance, medical insurance is very important, but unfortunately, there are no OPD related insurance schemes, very hard to find out. But hospitalization covers are there, so that basically, I mean, at least a small one to cover 150,000 or 200,000 is very worthwhile as far as these people are concerned. I mean, when you are going, when you are getting age, I mean, this is one of the key area. This has to be prioritized in my view, right? The insurance, ensuring coverage for hospitalization, medicals and critical illnesses. I mean, if you go to the relevant insurance schemes, so they have specified, I mean, what are the critical illnesses that they will cover. I mean, so if you go through the last what you call proposal, what they have given, I'll come to that one later on. You will understand. I mean, it is very important to have this kind of medical insurance. Then planning for medical expenses without depleting savings, and then so that we have to do it properly. I mean, without making any huge impact to the day-to-day operation. So that is what I have mentioned in the third bullet point, right? Then I always discuss this 6 to 12 month living expenses should be set aside. So that is very important. But if your insurance scheme is not enough to meet your health, right? So then you have to have some kind of cushion. So in order to do that, you have to have some kind of fund separately to meet these expenses, right? Then regular, then the other one is basically, I mean, we are, so the, I mean, even other countries, basically these regular checkups and all these things are mandatory. But in Sri Lanka, I mean, I have not seen this kind of mandatory checkups. So mandatory checkups is very important for you to check the status. I mean, when you are getting old, so that is, we don't know what exactly the status of our health, right? If you are doing kind of regular checkups, right? Sometimes you may have to, I mean, spend some money, but still it's worthwhile. You can basically uh, uh, realize what exactly the status of your health in advance. So then basically, I mean, these huge expenses can be cut it off, right? Utilize then but this is one of the categories, but the other poor categories, utilize government and community support for the seniors where available. So that is the other area we can keep them informed. So there are a lot of community supports. I mean, those things, I mean, they have to get this support from the relevant people and especially government in Sri Lanka. I mean, so we have what you call the pre-medical service. I mean, you can get the support, but there are certain concerns. But still, I mean, we have this support, right? So those are the key financial concept. Sorry. Then, in addition to that, estate planning, estate and inheritance planning. But this is also again applicable to part of the people. I mean, they can really focus on this area, how that should be allocated among their children. So that has to be planned upfront, right? So otherwise, there will be a lot of repercussions later on. So they have not given the nominees, but they have bank accounts. Nominee has not been informed, and later on, even their legal heirs won't be able to get the money back. So then you have to basically go to the courts and do some testamentary cases to get this money back. So that is a very long process. But in order to get this money back, the best thing is basically keep the nominee informed to the bank, right? So that is as far as your bank accounts and fixed deposits are concerned. But in addition to that, your other immobile properties, also you can have a will. So those are the key things. But these information are also important to the senior citizens. I mean, uh, so that is very important. Then other one is debt management. I mean, my advice is basically minimize unnecessary loans and credit card debts. So especially when it comes to credit cards, then majority of the people are they are using credit cards now. But the problem is there are certain traps, right? Then people will tend to buy the goods, but later on, so they are not in a position to settle the money into the month. So then they will settle the minimum amount. So the balance amount will expose, and there will be somewhere closer to 80 to 18 to 20% credit card interest. So that is basically a trap, right? So then basically they have to get another loan to settle the credit card. So, I mean, that is not sustainable, but we have to keep them. So, that is the main reason why we need to have kind of budget. So, then you have to have your expenses planned in a particular month. Even you can use the credit card very tactfully. So, that is basically very important tool for you to use it properly, right? If you are using it unnecessarily and if you tend to do that, so there will be a lot of repercussion, right? So, that is key financial concept. Those are the key things what I have decided. So then consider this as a base document, and you all can put your inputs and basically uh, enhance the content, right? Before you present it to the what you call the senior citizens. Then the economic principles and theories. So I'll just glance through. I mean, these things are very familiar with you all. I mean, as finance people, time value of money, opportunity cost, risk versus return, supply and demand in healthcare and living costs. So those are the key areas, I mean, important to the senior citizens. Okay, we'll go through one by one. At the time value of money, understand that money today worth more than the same amount in the future due to the inflation. So then, I mean, that 10% what I have discussed before is important for you to, I mean, uh, address this inflation. But as you all know, I mean, today's inflation is negative, but it doesn't mean the real picture is reflecting today, right? Then central bank anticipated inflation is somewhere closer to 5%. So that probably will start from mid of this year. So then year to year inflation 5% is the minimum amount, average amount the central bank is planning to maintain. So then it means basically each and every year you are, I mean, uh, your purchasing power will drop by 5%, right? So then you have to have some kind of cushion to address this concern. So that is what I mentioned. I mean, the time value is very important. Otherwise, if you keep the same amount, I mean, year to year, if you use the entire interest amount, then say, for instance, the senior citizen who totally depend on interest income, so then what he is doing is basically he use the entire interest account and capital amount, he will leave it as it is. But the same capital amount will not be sufficient to meet the next year expenditure, right? Next year also say he is getting the same interest amount, but he has not allocated additional funds to, I mean, for the growth, but he is getting the same interest income. So that same interest income is not sufficient for him to meet the next year expenditure. So that is, those are basics. I mean, those things we have to keep the senior citizens informed. Then opportunity cost, and then basically we have to I mean, consider the opportunities as well. I mean, when it comes to make this expenditure, I mean, luxury versus saving medical expenses. I mean, there are certain opportunities, but before we use in the luxuries, we have to think about your priorities. So that is what I meant here. Okay, the risk versus return, then the high risk returns, basically we have to avoid it. So that is the key concept as far as especially the senior citizens are concerned. So they won't be able to, I mean, if something goes wrong, so I mean, as a juniors, if you, I mean, junior citizens, if you do something and if something goes wrong, so you have time to, I mean, rebuild. But these people can't do anything. So that is what we have to keep them informed. Okay, don't go for high risk, but still it's worthwhile to consider the non-financial sector and the real estate. Even real estate, if you go to real estate, I mean that is the key sector the people can invest if you have money. But see, certain senior citizens you may come across, I mean they have enough money, but their concern is now interest rate is very low, but where we can invest. But I know there are a lot of people now they have withdrawn money from the bank and they have invested in real estate. right? They have additional money. So that is what I'm saying. I mean, if you have, I mean, very limited money, you won't be able to do this kind of investment. But if you have money, but you can invest in real estate. I mean, this is very booming industry. The real estate is a very key, the place where you can do this investment now. I mean, their rate of return, I mean, ROI is also very high. I mean, compared to the bank interest rate, right? So that basically we can keep them informed. I mean, considering their priorities and considering their income level. And then supply, demand, and healthcare living cost. Recognize that the demand and healthcare increases with age, leading to a higher cost. I mean, those are the things. I mean, before I I discussed before also, right? So then the key thing is basically at least to have affordable insurance to uh, cover part of the healthcare needs, right? So then, I mean, just saving is not enough. At least to have some kind of affordable insurance. Then, in my previous example, the mere allocation of 3,000 is sufficient for you to, I mean, get 150,000 the insurance cover, right? So that is very important. So if you go on, I mean, if you can increase further, so you can go up to 1 million. This 60 plus, they will allow you to go for 1 million. So that will start from 60 years senior citizens, and initially they will give 10 years period, but once you reach 70, then you all can go for another 10 years. I mean, that opportunity is also there. So as far as 60 plus is concerned. Okay, then financial literacy and skills for senior citizens, as Professor Ruan explained. I mean, this is one of the key area. I mean, I don't know to what extent. I mean, they can capture this one. I mean, they are. I mean, senior citizens are very reluctant to use. Uh, I mean, online apps, but we have to keep them informed. These are the possibilities where they can ease their, I mean, day-to-day life, right? The use in certain apps. So as far as banking transactions are concerned, I mean, payments, all the utility bills, they can make it to banks, right? So all the banks now they have introduced their online banking, right? Then if you can get the online banking facility, right? Then if they can't operate it, what we can recommend them is basically they have to have a, I mean, the trustworthy person in their family. Probably they can, if they know the concept, probably they can get the work done, right? Not the outsider from their family member. Probably they can basically ask, okay, to make these payments and make even fixed deposit, you can do it online or now, right? So no need to go to the bank. But senior citizens, the other concern is they are, I mean, so some people are very happy to go outside, but some people they don't want to go outside, but they can't go out. So in that case, I mean, so if you can give some input to them, I mean, there are certain applications they can make use of. I mean, this is very useful for them. Then pension and social security awareness. I mean, so pension and I mean, at what point they can make use of, especially EPF and ETF. So I mean, they can't use it the way they need. I mean, at the retirement, of course, they can get this money back. And pensions, of course, I mean, each and every month they are getting no, so that will not be an issue. And passive income generation is basically, I mean, the seniors are concerned, they are getting passive income only, no, that they can't actively participate. But some people are there, still they can participate and earn money. But other people, basically, they depend on passive income. Sometimes they are investment income, sometimes they are rent income, sometimes basically their children's health. So those things, I mean, how to manage this and how to plan this is the important one. Those are the areas where we need to keep them informed, right? Financial literacy. Then, so those are the areas where I have discussed already, right? I- Especially check the balances, pay bills, and transfer funds. Avoiding financial frauds and scams such as phishing emails, fake calls, and especially fake calls. And the other one is basically the Ponzi schemes. the pyramids, basically. I mean, majority of you all may be knowing of these things, but we have to keep them informed. But there are a lot of people now, they are approaching senior citizens and even other people, I mean, for this kind of pyramids. I mean, we have to keep them informed not to invest in these kind of things. I mean, initial stage, they are getting the return also, right? So then this pyramid scheme, so they are basically initial people who invested will be settled from the previous set of people. They don't have any mechanism to generate funds, right? So what they do is basically initial people, they have to find out another set of people. So then the first set of people will be settled using the next set of people. So that is the mechanism they have introduced, right? So that kind of Ponzi schemes also they are in the country now. In addition to that, even this plantation industry, so they are advertising lot, but there are certain plantation companies. It's still, I don't say, very bad to invest, but we have to check the status of these companies, right? So then the issue is basically we are getting the return after 10 years, after 8 years. It's very long-term investments. And what we don't know what exactly happened at the 10th year or 8th year. So these companies' status, we don't know, right? Then, so those are then the other thing is the Professor Ruan explained. The different categories of people. So what we have to, the people we have to approach, right? The seniors, there are different categories. Seniors with in-service funds in hand, right? Retired with one-time lump sum payments. The seniors under monthly pension scheme. So that is the second category. Seniors who depend on their children, financially supported by family members. The seniors currently working as daily wages. But there are some people, by still they are working, and their priorities also. We have to discuss accordingly. The seniors currently working as monthly salaried employees, and seniors fully depend on government subsidies programs. But there are people who depend on government subsidies, right? Then the seniors partially depend on government subsidies and the children support. So likewise, we have categorized it to different categories. The points what we have discussed before, we have to explain based on these categories. So that is what I think you all have to do it. Use this document as a base document and change it accordingly. And we can basically, and in addition to that, the professor, develop very good, what we call curricula. So, from that only I have taken the key points. So based on that, we have further developed the contents and we can get ready for the presentation for the senior citizens, right? So that's all basically in my, these are these two actually what I have explained before. Uh, Especially taxation. So these are the circulars issued by the Department of Inland Revenue for them to, give the declaration to the relevant financial institution. Just go through these two documents and keep the senior citizens informed accordingly. This is very important for them. I know majority of the people, they have fixed deposit where they are getting interest income, but definitely their income level is less than 1.8 million. So this part is very important for them, and they have to get the declaration. Before that, they have to get the TIN registration. I think you all may be aware of this. There's a mechanism to get the TIN registration. The TIN number should be there in the declaration. Declaration, they are asking the TIN number. Without having the TIN number, you won't be able to give this declaration to the financial institution. That is very important. So just go through this one. This is basically self-understanding, right? So then, based on that, probably they can give the declaration to the relevant financial institutions and avoid this withholding tax deduction. So this is the other one, Medi 60, what I have explained, right? There are five schemes they have given. If you go through the first, I explained the first one, just 37 rupees, 37 rupees 37,000 rupees is sufficient for you to get the 150,000 cover. So, right. So that is very important. Those are the basic idea about the contents. They are in the curriculum. But that's all from my side. I mean, it's time for us to, I mean, have a discussion and see what are the things to be included further. Thank you very much.
Thank you very much,